What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money, investing in fractional real estate online, as usual. Today I'm going to have a little bit different of a video. I've got 3 or 4 pieces of news that I want to cover about different platforms, Arrived, something new that we haven't really talked about, and Solslot. Not going to do a deep dive into any of it, but just this is a little bit of a, in case you missed it. I haven't been on top of covering everything that's been happening, and so these are just bigger pieces of news that if you haven't noticed them, I thought would be interesting to start a discussion about. As always, feel free to jump in the Discord and talk about this or any of these topics. Jump in the comments. Before I forget, please like and subscribe. In the description to this video, I have a link to the Discord that I just mentioned. We've got somewhere between 150 and 200 investors in there now. We're talking about a whole bunch of different platforms on a regular basis. So feel free to jump in there. Also, I have links to all the places where I'm currently invested in fractional real estate online. Just because I invest in those platforms doesn't mean that you should. You want to do your own due diligence on any of those. Okay, now that's out of the way. First thing, Arrived, a couple pieces of news with Arrived, right? One, we're in the middle of one of their secondary market windows where you can buy some of their aftermarket shares where investors bought these at the IPO, and then we can buy some of these. You can see there are some decent discounts, and they've added a new functionality. They've added this demand chart, and at first, if you look at this, you might not really, if you didn't read the little thing on how to read this, I think this is actually really helpful. So this little dotted line here, I don't know how visible this is, so let's zoom in here. This little dotted line is the Arrived valuation. And so this is basically showing you how much demand there is. So the green is buy orders. So how much demand there is at a certain price. And the red is sell orders. And so how much is willing to be sold at a specific price. And so I think this is the way. I've been really impressed in general with how Arrived how they're handling their secondary market. I think they're doing a lot of things in a smart way. I think this is another thing. Like, okay, it's an easy graphic to understand once you actually look at read their thing that explains it to you. And so I can look at this very quickly and say, okay, all of these have this huge demand. So if people put these big buy orders, my guess is somebody just went through and did this, huge buy orders at super discounted prices. But what you really want to see is, okay, is there selling, are there people willing to sell below the Arrived valuation? I mean, that's my thing is I'm trying to get a discount on here, right? And I did some videos in the past, if you haven't seen those, about how I'm looking at the valuation, comparing it to what Arrived thinks it's worth. But in general, this will give you a good idea of like which ones actually have a decent amount of, like this one has a pretty good chunk of shares that are up for sale at a real discount to the Arrived valuation. So that would make me click into here, and I can look at it. You can see, okay, yeah, tons of people want to buy it, or there's tons of buy pressure at $8.15. But then it falls off pretty quickly after that. You click on this view all, and you can see where all that is. And then on the sell side, okay, so we've got quite a bit, pretty big chunk that wants to sell here. Oh, what's happening down here? Wait, what is this? Why don't I see this on? Oh, no, these are the buys. I'm looking at this backwards. So quite a bit of sells at 8.15. Nowhere near as many buys, right? There's only 136 plus another 10 above it, because right, if these are above this amount, then those should execute, I believe, if they're the same price or above. And so this lets me know that at the moment there's a decent chunk of these available at the 8.15 price. And so, and let's see, when we look at what is the Arrived valuation? Arrived thinks it's worth 10. So I mean that's a meaningful discount, right, from what their valuation is. Now we have to go through and look at, okay, what do I actually think the property is worth? What are their, what's their debt? What's their cash position? And we talked about how to do all that before. But anyway, I thought this was a really nice visual to make my job easier to go through and say, okay, look, we've got a couple of chunks of sells here. We don't have any matching buy. A whole bunch of that. And there's only a couple of days left Now, maybe these will get, picked up in the morning because trading is not active right now. But you can see there's a whole lot of this where there are, there's tons of demand at a huge discount. What's interesting is you don't see a lot of people trying to sell way above valuation, although you see some. So I don't know. I think this is kind of a, I don't know. I liked that they added that. That's the only big change that I noticed in this week's round of selling. Maybe this was here last time because I think that I was sick that whole week of the last one, so I might have just not even logged in. But the last time that I actually looked at Arrive secondary market, they weren't doing this. So I think this is pretty cool. The other big news they put out, and you can see it's up here, is they just raised $27 million in funding to launch the stock market for real estate. Now, what exactly that means, I don't really know. But there's been more and more news about money getting moved into the fractional real estate investing space. So I just wanted to mention that. If you didn't read this article, I mean, it's really brief, but it is, just good news for our space. Speaking of which, this is the other piece of news. I don't know if anybody watched this little interaction between, it's the CEO of Robinhood and the CEO of Opendoor. If you're not familiar with Opendoor, they're what you call, what have called themselves an iBuyer. Really, they're just a huge property flipping business. And so what they did is, they enter your market. They do tons of advertising. They basically say, hey, look, we'll buy your home no matter what the condition. They buy it. They oftentimes will fix it up. Sometimes they won't do any repairs, and they list it for sale. Opendoor came into our market here in San Antonio, was buying up everything for a little bit. In my opinion, they overpaid for tons of stuff. Turns out that flipping isn't as easy as just, they just really pushed that their technology was helping them come up with better pricing. But from lots of the deals that we saw here in my market, it looked like they just overpaid. Their stock value went way down. They had all kinds of problems. Well, they got a new CEO not too long ago. He's cut a whole bunch of their staff. He's really leaning heavily into using AI. So they're calling it, Opendoor 2.0. But one thing that they just, that they started talking about is tokenizing properties. And so it sounds like, and there's, I couldn't find a lot of, this was the longest video and it's only 2 minutes that I found. If you have a longer one, you have a link to it. I'm really interested to see it. But this is a discussion between the two of them. And the CEO of Opendoor seems like he doesn't really want to confirm exactly what they're doing. But what it sounds like is potentially they'll buy the properties just like they have been. And instead of flipping them back on the open market, they'll tokenize them, put a rent to own buyer in there is what it is what I think the business model is going to be. That buyer is going to pay rent and is going to have the ability to buy tokens over time. And so then they'll sell the rest of the tokens, so they'll get their liquidity, right? And it'll look something like Lofty, but where there's the intention is a rent to own. And so as the person buys more and more of their tokens, then they're paying themselves more and more of that rent, right? And so it ends up being, I don't know, I think it's a really interesting model to see two companies like Robinhood and Opendoor talking about doing this. I just thought that was great news for the space. Just like we're always talking about, I think we're really early in the fractional real estate investing space. Now, I don't think they did, in my mind, a terrible job as an iBuyer, and I think their stock price reflects that. I'm not trying to give you any stock picking advice. I haven't looked into their financials at all. I just have seen how they operated in my market, where I, saw them have tons of homes that sat on the market for a long time, often looked like they overpaid. I don't know what the back end financials were, because sometimes their purchase price wasn't really what they paid because they charged the sellers some fees. But anyway, didn't seem like they did a great job there. So it's not the most exciting prospect for me to see them come into this space, but it is a new CEO. He does seem to be changing the way they're doing things quite a bit. So, maybe their past track record doesn't really matter so much. Although it is a little bit worrisome that they're kind of like jumping on every new trend in real estate, right? iBuying was the big new thing probably 5 or 6 years ago, and that's when I don't know how maybe they've been around longer than that, but that's when maybe it's even a little bit longer. But so that was like sort of the new trendy thing. And then when the CEO took over, he's like, we're going to do AI everything. So really, really buzzword heavy, right? Like, okay, we're doing the next newest thing. And I think talking about that kind of stuff is always good for your stock prices. You get people excited, but what does it really mean? Although they have had a huge reduction in their workforce, and presumably they're accomplishing that by using more AI. But then, okay, tokenization, that's, you hear a lot of people talking about it now, of tokenizing assets in general, not just specifically real estate. And so is this really going to be a big part of their model, or is it something that, gives them a little bit more, sizzle to sell, right? Like where it sounds good, but it's not really going to be a huge part of their business model. I don't know. The more we find out about this, I just think it's super interesting though. I love that I've now heard Robinhood tied to several different fractional real estate companies. Some of them, this news is public already, some of them not so much, but where they're going to, be a platform where you can list pieces of real estate deals in some form. Some of them maybe tokens, maybe just actual shares from some of these other companies. So it's really like to see that this, this sort of thing is happening. At the same time, because of the train wreck that sites like Lambda and now Lofty have been, it worries me if our space grows too big too fast, right? Like imagine if, Lambda shares of Lambda properties had been available to everybody, widely publicized, and everybody could buy them. And I mean, I know they were, but it wasn't, they weren't it wasn't like front page news, people all over the world. If you're selling stuff on Robinhood, everybody's going to know about it, right? And so, or if all the early Lofty properties had been on there, there would just be so many people right now with a terrible first impression of tokenized real estate or fractional real estate. And I think that's the real danger for our industry, right? Is that we grow too big too fast. We have, we have a product that's not great for anyone, or is really only great for a very niche group of people, but is being marketed to a much wider audience. That's kind of where I see Lofty sitting right now, right? Like there are some of us that are still doing pretty well with our investments on there, and then there are a ton of people that are losing money. But so it is. I don't know. I just get sick of telling you how terrible I think that platform is. I still have money on there, and I'm still doing well. I just think that for the average investor, it's not a good place to be. I think that very little works the way that they say. So like if all of a sudden you moved all of Lofty's tokens onto Robinhood, yeah, prices would pop. People like me would sell out of everything. We'd make some money. A year down the road, a bunch of those people would lose money. Now they'd all hate fractional real estate investing. So that's what's worrying me. I really want to see the space grow in a way that deals really make sense. It's a good segue into. So I talk about Solslot quite a bit. I've bought several DACs on their platform. Always just a dollars and cents investment decision. If you've looked at their website recently, though, there's this Visit the Private Club. I've actually talked to Matt and Bo a little bit about this. Those are the people who are behind this, and I'm going to have Matt on Fractional Friday this week. So I'd encourage you, if you haven't already, take a look at this. Take a look at this offering they're doing. Send me questions to ask, because this is where I really worry that they're trying to sell the sizzle and not the steak, right? I don't know why that phrase is in my head today, but where they're getting you really excited about something, but is this as good of a deal as what we're used to seeing from Solslot? And that's a question that I'm not sure the answer yet, right? So let me go into what they're doing. It's a large home in Malibu, the Malibu Mansion. I've heard people mention it that way. It was, I believe, Kanye West's former residence. Um, it is now being flipped by what appears to be an experienced flipper, and that's this project, and that's this. You can buy a piece of this uh, deal, but I don't know. I listened on the call that they had about it, and it still wasn't exactly clear to me. Like, you're still getting that the forward sale equity interest, but then this is going to be like a membership where you get some additional um, perks, I guess, for investing. And so, this is the project. Max term is 18 months, which is longer than what we've seen on most of the Solslot deals. One of the reasons Solslot's worked so well for me is because a lot of the DACs have turned over very quickly, and because you have a fixed profit, the faster those deals turn over, the better off that you are. This is, so max term 18 months, projected time frame 12 to 14 months. What they referred to as the worst case scenario is this property is actually sold, but they think that there is some potential to keep it in some sort of membership, private parties type use for it, and in that case, then potentially the DAC holders could sell out to to a second wave of people who are investing in that business model. I think that wasn't fully clear to me, so that's going to be some of the things I'm going to ask questions about. As is market value, $35 million. They're using a BPO, right, for the after repair value. I really don't like that on something like this, but it's really tough to put a value on these sort of trophy assets anyway. And this is one of the things so I think what I've liked a lot about Solslot to this point is they have very bread and butter deals, right? It's really easy to understand what's that home. It's just a single family home in a neighborhood. We've got an appraisal. We know, it's just a matter of we're waiting for it to sell, right? And then, okay, now this one here in Detroit, there's a little bit of a business plan. They need to finish some renovations, and then they're going to refinance. Okay, it gets a little bit more complicated, but it's not still relatively simple, straightforward real estate deal, right? I still like I like the single family homes just waiting to sell once. I mean, that's the ideal situation. I think that's my favorite so far, because I can just imagine, just getting really good turnover and churning your money and getting great returns that way. This is getting us much further from that, right? So when they're saying their projected time frame, there was a little bit of discussion on this private call that we had where they talked about, okay, there's basically no way it's going to get done before 10 months when you talk about, just permitting, dealing with the city, getting materials, all that sort of thing. And so 12 to 14, to finish the project. And then also, you have to sell it out. I think, we're going to look at the actual returns in a minute, and those would be, if it gets done and sold in 12 to 14 months, I think they'll be fantastic, depending on what this is being sold in tiers. But if it stretches out to the 18 months, which I think it reasonably could. I mean, these types of projects scare me when you have these big, really high-end projects. And I think that this person has some experience. Let's see. I think he's in here. Where? Somewhere on this page, there's a description of Bo, who is the person who's doing this project. How it works, membership tiers, book a chat. I don't know where I found it. But this is where this deal, it is. So one, there's the BPO for the exit. That scares me a little bit. But again, I think it's really hard to figure out what the exit's worth anyway. But then the other thing on here is, so when we get to the tiers, membership tiers, yep. Why did that bring me back up there? Okay, well, there's a little buggy, the website, but let's get down to these membership tiers. Pretty sure. Oh, am I just losing them? Oh, no, no, no. I looked at this beforehand. Here we go. Okay, so this is our property snapshot, you know, but then this is the membership tiers. So, okay, $1,000 is the cheapest one. So we're seeing something that's a big step up in price from what the DAX costs. The minimum price here were $229. I've bought some of these which were even like $25 or $30. So depending on how much they're trying to raise, they have to have they have some bigger ones. But so this is remember our exchange rate multiplier. This is what determines what our actual profit's going to be. And so it's 1.2 here for the gold, which is the $1,000 minimum investment. This is, if this gets done in a year, okay, you're getting your 20% return. Perfectly happy with that. If it stretches out to 18 months, right? If it goes full term, then we're down to like just under 13%, I think. Not great, but I think, somewhere in between there is where you're going to end up. So it's not a bad deal. I think it's not, one of the things that, with the ones that are just the sales of single family homes, some of them I've had unbelievable annualized returns because you always have the potential of those selling quickly, right? If it's one that's about to be marketed or very close to being on the market, here we don't have that potential, right? It's no matter what. I think I don't imagine any scenario where you actually sell out earlier than 10 months to a year from now, right? So we don't really have that big upside potential, but if you're somewhere between 13 and 20% is not a bad annualized return. Depending on what you think the risk is here, I don't know a lot about flipping homes in Malibu. I know there's definitely markets where you can run into problems with the city. You can have all sorts of things go wrong. That could take you longer. The sale price doesn't really matter because of the way the forward sale is set up, right? Because it's based on valuation. But so it's really the timeline that could hurt you. But then the other thing they're doing is then they're adding these like, okay, you have a one private guided day at the Malibu estate, a property tour, architecture briefing, private networking mixer. And so when they were talking about this, one of the things that they're sort of selling here is access to learn about the deal, learn about how they're doing it, understand, and some of these were even like, getting to talk to the developer and following along with how the deal's going and all that sort of thing. So I think that there's somebody that creates, somebody's happy about these extra, private networking mixer. The next, $10,000 for the next level, and you get to 1.25, so a much better exchange rate already. Having a couple of these annual members days, I don't fully grasp how this is going to work if it's flipped and sold. I think this is if it's like held. I'm just not really sure exactly what's going on. And then when you get to the 100,000 level, okay, now we've got and I know for a lot of the people that are following my channel, this is not where they're thinking about when they're thinking about fractional real estate, right? Now, I'm pretty sure that this guy, Bo, who's, it's the Bellwood Properties, or I'm not sure if it's just Bellwood or what it is. He's already doing these big projects out there, and he's already raising large sums of capital from other people. So I think in his world, this is a more normal raise. I think for most people looking for fractional real estate, this is not it, right? And even the 10K, I mean, I think there's some of us that are putting, bigger multi-thousands into some deals, but I think even this is not really where the attraction is for most fractional real estate investors, right? I think, a lot of the sites, $50, $250, $500, minimums. And then, Mogul has now said their average is somewhere between 5 and 10,000 per deal, but they still have I think a $500 minimum. And they might have the highest minimum out of every platform right now. So, there's a lot that are $10, $50. So, this is still fractional real estate, but it's a much different deal. So I'm curious what you guys think about that, if you have any thoughts around that. The other thing is too, like when you get to the largest um, tier, they're getting a 1.33x return, right? And so I know we've had discussions. I've had discussions with a lot of you about these, multi-tiered returns where you're putting more capital in and you're getting a better return because of it. I think to a certain extent it makes sense, because it does cost a lot more to raise capital $1,000 at a time than it does $300,000 at a time. I think that's also why it makes sense to do um, you know more of these perks. But this is such a steep difference, right? 1.2 to 1.33. I mean, this is like 60% more. Is that right? No, is that 13? Yeah, it's over 60% more of a return for the bigger tier. And I know I've heard from lots of investors in the past that this sort of thing really bothers them, right? Like I understand it costs you a little more to sell out these bigger ones and the small ones. But when the level of return is so drastically different, um, the idea is to sort of move people into the higher investment. But I think it really discourages a lot of people from this lower end. Curious if other people think this as well. I didn't want to talk too much about this deal. Really, I wanted to get anybody that does have questions about this, please send them my way. I want to have a good discussion. Fractional Friday this week. It's at 10:45 Eastern time. We will have Matt, one of the founders of Solslot, on there. I'm gonna ask him about this. I'm gonna try to ask him tough questions, right? Because I really like the bait, the default product, the product we've seen on Solslot, these single family homes where we're doing these forward sales, getting a great return and often very small minimums. Very quick turnaround. I think I have one that I've held on for the better part of this year, but most of them have sold very quickly. And so, what do you guys think about this direction for the platform? Like, does this make a lot of sense to you? My thought is it's just a completely different user base that's into this, right? I think maybe people that are trying to break into real estate development, real estate flipping, that market, all of those things could be a reason, to want to really favor this type of program. But for people, who I think are my average audience, us couch sitters, us truly passive income, I'm not going to get off the couch to go to a networking mixer. That's just not me. I'm curious how many of you are really of that same mind as me, or some of you really see this as, yeah, this is like, this is a real benefit. I wanna, hang out with this guy who's doing this deal, learn from him. I want to do those same deals. It's worth it for me, and at the same time, I'm getting a good return on my investment. And like I said, I mean, even the lowest tier level, I don't think it's not a terrible return. It doesn't have that same kind of upside that we're seeing like on those very quick turnarounds, but still, if you compare it to a lot of other things, and then again, depending on what's the value you're putting on, the mixer, the tour, I mean, like if you think about it here, it's only $1,000, right? Like, there's plenty of these events that if you wanted to go and get around a bunch of other investors that are into this kind of thing, you're going to spend close to that amount anyway. Now, obviously, you got to get to that area. If you're not there, that's problematic. But yeah, I'm just super curious if this is interesting to anybody in my network and that's been watching this channel, that's in the Discord. And then if not, what do you think makes this more attractive to people like us or to people like me, right? Even if it is, I mean, honestly, I'd love to see a tier where I'm still just maxing out or getting close to the highest multiplier, but getting no other benefits, right? Like I'm for me, 100% dollars and cents, right? And all these other things are costing them time and money. And so, I could see that there should be some trade-off there. So I'd love to see a zero perks tier that gets you somewhere closer to that higher amount where you could do that, at a lower dollar amount. Obviously, that to me seems interesting. It seems like it would be what would get, a lot of people in our space more excited because, like I said, I mean, I think that, I could be wrong. Maybe a lot of you are just like, no, I do want to go out. I want to, network with these developers and other investors in this space, and love to visit that property. I mean, like, I'm uncomfortable in fancy places, right? Like, I have, I still buy cheap cars, and I still, like, it is. I live in a nice school district, and everything that we do, like interacting with other people, I just don't, I'm, if you met me out in the world, you would wonder if I were a homeless person or residentially challenged. So, this is like the opposite of the stuff that I get excited about. All I care about is, okay, what do those numbers look like, and where's my risk, right? And so that's, at the moment, we don't have a lot of detail on that. It's really hard for me to get excited about putting a big chunk of money down. Now, on the flip side, I have got, I did get to talk to Matt about this. I've talked to Bo. I had a call with, I think his name is Tim, someone from this group. So, like, I think that they're open and would probably answer any questions I had about the deal itself. If I were going to make a big investment into this, but for me, a lot of what I'm doing here is not just for my investments. Like, I still do perfectly fine with my own deals in real life. I'm really interested in this space growing in a way, the fractional real estate investing space, in a way that's going to be useful for a large number of people, right? Like, this is more, I mean, these types of deals have been around forever. They just don't exist as tokens, right? Like, if I want to be, it used to be very common for real estate developers, you go to country clubs, you go to, there's always some area that we had, I can't even think of what we called it, but there was a private club that a lot of the people I worked with were a member of when I worked in Philly and did a lot of capital raising. You always see these things, right, where you have these. So this isn't like a new model where there's different tiers and the bigger investors get more benefits and sometimes access and some different things. I think it's, to do it in a way where it is all all tokenized is what's, the most interesting thing about it. I 100% understand why Solslot wants to be a part of a deal like this. I think it's going to attract a ton of attention. I think that, I think they had actually mentioned Bo from Bellwood. I think he's been on maybe Selling Sunset or something like that. One of those shows, it's, so, I think this is going to attract a ton of attention, but it's sort of what I was talking about before with the, what I worry is that we attract a whole bunch of people to the space, but it is, it's for the wrong type of deals. Now, I have really enjoyed Solslot's deals so far, and I think that they're, so I think this underlying deal, my guess is once we really dig into it, it's going to be a decent deal. But I think it really makes me nervous when the main push of the sales thing is not about the deal itself, and it's about some of this other stuff. I don't know. I'm not, but for some people, I think there is value. Somebody actually wants to be a part of this exclusive founder summit, or, have name recognition at the property, or some sort of co-branding privileges. Like, I get that is value, or wants to have this chef dinner, or, these private estate sessions, which again, annually, leads me to believe this is if they hold the property, don't actually sell it. I realize that to some people there's some value in that, and it's just not the way I look at the world. So, so I'm really, you can see I'm kind of wrestling with this, right? Because I do want to have a lot more attention attracted towards fractional real estate investing in general. I think having more people with money there's nothing wrong with that, right? But I think, um, you know, I still, one of the things that I really like to see is the ability to diversify and buy a lot of little pieces of deals, right? And I guess for some people, buying 1,000 at a time, and like on Mogul, I'm buying more than 1,000 at a time at this point. Most of my recent ones, I'm putting like 2,500 in. Um, and at some point it will be a lot more per deal. I just I like to have the ability to experiment at a very low cost. Um, and I think that for most people in this world right now, like that is the appeal of fractional real estate. So I don't know. Anyway, I think that I've babbled enough about this that is sort of, I'm of two minds about like where the value is. I'm hoping this isn't the overall direction for the platform, for the Solslot platform. I hope this is a way to attract some eyeballs, to get more to get more people excited about the idea of fractional real estate. And overall, we're just going to get to see a whole lot more of these bread and butter deals. And it is, and maybe the occasional one like that. I don't know. Obviously it's not my platform. I don't have a say, but that's what I think. I mean, these have been, I've had some really fantastic IRRs with some of the quick sellouts. I have, I think it is something that you can, over time, with some volume of deals like this, you can create some level of consistent, repeatable returns, which is all I ever want, right? I don't want, I'm never trying to swing for the fences on any particular deal. I'm always looking for diversification, safety, consistency, the ability to get that good upside, but more importantly, protecting my downside. And so I don't know. It seems like I'm just not sure. Not sure if this is the direction that's getting us there or not. But yeah, again, just drop some comment or drop some questions for me. Feel free to put it in the comments. Jump to the Discord. Send me your questions directly, or jump onto that live and ask some questions there too. Right? You can always put your questions in the chat on the live stream. 10:45 a.m. Eastern time this Friday. What is this Friday? The 14th. Yeah, the 14th. Anyway, that's it. That is my whole rant for today. Until next time, I'm going to keep making mistakes so that you don't have to.